Hey, it's Sasha Evdokov, founder of Rise to Learn, and in this video episode, I want to talk to you about the famous phrase of why 90% of stock traders lose money. Now, there are a few different reasons why this statement came about. Now, one of the reasons is that people think very directional, or they focus very much on what they think and they stick to it. They won't change their mind. They won't go out of their comfort zone. So for example, if you're a trader who only thinks directional, buying low and selling high, or on the short side, selling high and buying things back lower, then that's the way you're going to trade. You're going to trade directionally. And you have really a 50-50 chance of getting it right, or maybe a 33.3 chance if the stock stands still. So basically it can go up, it can go down, or it can stay where it is. But really, you have a 50-50 chance of getting it right. Now the problem here is people get impatient. So even if you do get things right, you might be impatient and you might get out way too soon. Or the stock may have some confluence behind it, dips a little lower, and then you get out and then the stock continues higher. So again, you're getting out too early and you don't have the patience. And finally, the third thing is that people are hoping and praying. If the stock actually tanks a little bit lower and then it goes down even further below your stops, below where you're comfortable with, you're having trouble sleeping at night, then all of a sudden people start hoping and praying. And in this business, hope and prayer does not work well. That works great for a lot of other things in other industries and other areas of life. However, in the stock market, you need to eliminate hope and prayer, and you need to stick to a proven strategy. You need to stick to the numbers. You need to stick to your risk and reward plan and your stock trading system. That works a lot better. Now, if you're trading options and you don't understand time decay, then you're probably losing money every single day. And you definitely want to stop trading options immediately until you understand the time decay behind option premiums. So if you're buying something like a long put or a long call for the stock to either go up or down, then you're probably losing money every single day behind options. Again, it's something that's just losing money and decaying over time. And this is what the dumb money does. Not the smart money, the dumb money does. So don't just buy a long put or a long call just in hopes of a stock moving in one direction or another. This is not what the institutionals do, and this is not what the professional investors do. They trade option spreads. They trade things like butterflies. They trade things like calendar spreads, maybe iron condors, all kinds of different things, but they put the time value in their favor, not against them. Now, yes, of course, there are certain instances to trade long puts and calls. But in general, if you don't understand time decay and you're trading options, don't trade options, because that's what the dumb money does. In addition, why over 90% of stock traders lose money is because they're looking for the holy grail indicator. They're looking for the holy grail stock chart, or even the newsletter that'll make them a fortune. They're looking for somebody to send them alerts on what to trade, or they're looking for this magic indicator. And they have their whole chart system set up like a circus. It's so busy out there. They have maybe 20 indicators on there. They might have the parabolic SAR, the VWAP, they might have the Bollinger Bands, the stochastics, the MACDs, all those things, and they don't know what to trade off of. I mean, which signal do you look at when you have a circus for a chart? You really don't know. So that's what you gotta remember, is that keep things clean and simple. The only true indicator behind trading stocks is the one that you create, the system that you create for yourself, and the methodology behind the way you trade. So the only way you'll be consistent is when you find something that works for you and then create and develop a system around that based on your risk and reward strategy. Now, all these reasons add up to why 90% of the stock traders lose money, and eventually it bankrupts them because they over leverage on their account. They try and get their money back. Maybe they start feeling confident and they don't understand the principles behind the money management. And then again, their account becomes toast, and eventually things collapse and they're done trading. Now, for you to be able to trade for a lifetime or make investments or grow money from your money, then you want to make sure you have a good proven risk and reward strategy. You can be a horrible trader, but if you have a good risk and money management strategy, you will survive for another day, another week, another month, and another year. So stick to your rules, stick to your system, and that way you can continue moving forward. Now, of the 10% that do survive in trading, they make a fortune because of the 90% of the other traders that lose their fortunes. So all the money that the 90% of the traders that lose, all that 10% that's remaining of the profitable traders get that 90% of the money or the wealth. And this is what's very attractive for a lot of people in the stock market, is because they're reaping the financial rewards or the leverage power behind the stock market. But really, this is where it's coming from, is from the 90% of traders that lose money. So don't get sucked in and become one of those 90%. In either case, I hope this video was helpful to you. So if it was, share it on your favorite social media platform. And remember that all the great episodes are at TRADERSFLY.com, where you can sign up to get my newsletter alerts on other videos, along with checking out some of my products and courses on how to take your trading to the next level, from the psychology of trading and the inner game of trading to understanding technical analysis and stock trading fundamentals. Thanks for watching, and remember to do what you love, contribute to others, and most importantly, live life abundantly. Why won't this dollar stay up? Well, I guess we're gonna have to go with bills of Canada this time.